Holy smokers, folks, this ain't no dang jokers. Adobe, Salesforce, these stocks are incredibly weak. I mean, it's almost shockingly weak. These stocks are showing no signs of bottoming. They just keep going down and down and down. We're so low, we're below Chinatown now at this point in time, right? So I want to spend the front part of this video talking about these two stocks specifically, because I believe these two stocks are phenomenal opportunities over the next 3 to 5 years. Clearly, the market disagrees with me right now. So one of us is going to be right and one of us will be wrong in the end in regards to Salesforce and Adobe. We'll see who it is. I want to talk about my opinions on these two stocks in this video here today, because I believe they're two of the better opportunities you can find out there, especially when we're talking about $100 billion+ market caps out there. I want to listen to some Wall Streeters give their opinions on these stocks, okay? This gentleman on how AI is eating software stocks. This is going to be an important video to react to in this one here today, okay? This video, software stocks will rebound from AI scares, says this gentleman from Davidson, so that should be an interesting one to hear from, kind of bullish and bearish takes, right? Stephanie Link sold Microsoft, so I think this is interesting because it kind of plays in there with that dynamic of some of these sorts of stocks, right? And then I wanted to cap today's video off talking about AMD stock. AMD is now gone from, it was showing a lot of weakness to like rally mode at this point in time, right? And obviously AMD stock's been a phenomenal stock over the past year, up 95%. But this momentum specifically in just the past few days has been significant. This is a five-day chart on AMD. It's up over 14% in the past 5 trading days, right? While look at Adobe in the past 5 trading days, and Salesforce is down 11.5%, Adobe's down 9%. Like, these stocks just sell off and sell off, okay? So a lot to get into in this video regarding these 3 stocks. I appreciate everybody for joining me. One thing all I need from you, if you could just smash that little like button, that means the world to me, okay? That's all I need from you. If you want to be subscribed here to the channel, you can certainly subscribe as well, okay? Alrighty, so first off here, let's talk about this gentleman and his opinion, and then we'll kind of go from there, and we'll talk more in depth about Adobe, about Salesforce, the opportunity I believe that exists here, and those sorts of things. So let's get rolling.
Hey, Mike. Great to be here.
I mean, the market is starting to obviously register a ton of concern in this direction. Software as a sector is probably at record underperformance versus the semiconductors last year or two. You say more to go. Why is that?
Well, I've been through this before. When Amazon came out, there was a whole cadre of companies that were like, no one will ever put their stuff up in the cloud. It's not secure. It's this. And they pounded they go, they got on this network and they go, this won't happen. They sent me hate mails, but their stocks never worked. The market got it right. It discounted the disruption that was coming.
And back then, you're talking about stocks of the hardware
Dell,
makers.
IBM, well, the HPs,
sure, database
maybe
company.
even Cisco.
Yeah.
I mean, Dell stock didn't work for 7 years and then had to go private.
Yep.
Michael's a friend now, but I don't think he liked me too much back then. I'll tell you this. These companies in software, they had it so good in the 2010s, and it's over. And I think people can see what's coming. The marginal cost of coding is going to zero. And your traditional reseller checks, your traditional doing EV to free cash flow, which is not even free nor cash flow because they give so many stock options that in order to buy it back, it's really a lot lower. They're getting their comeuppance, and people are seeing what's at the end of the rainbow.
So you say the marginal cost of coding is free.
It will be.
So first of all, what does that mean for Anthropic or something like that, where they're actually giving you these agents and running the models, and it's just going to be some kind of cheap subscription?
Yeah. Well, it's good for them because they keep innovating on the models, and what they do is they put out co-work, right? And for them, they can put those things out, and they're very competitive with Microsoft right out of the bat, and what it shows is that when you're an athletic, private company, and you can come out with stuff like that, it is disruptive. Now, Microsoft could win because of Azure and other things. Thank God they have that. Sure. But people are very concerned about the traditional franchise.
I mean, what I said to Brent Thill, who also was arguing this last hour, is that, the software companies, the Workdays, for instance, would say, these models, they don't have as much specialized data and expertise in what they're doing as they do. And so eventually, if AI is going to be about trust and data, that they'll be in demand.
That's nonsense. Whoever owns the data is the winner, and the ability to do an agent and the coding will be a commodity, and the data connectors, those who connect the data, AI is going to get so good that you're going to be able to have AI first, agent first startups. Maybe not this year, maybe not next year, but within 5 years, do things that you can't imagine right now. And people are seeing it. You know, the stocks don't work. Our job is to pick stocks, and these companies that pound it. It's not. The stocks know companies are not paying extra for AI. We were supposed to have all this ARPU growth. It's not happening.
Yeah, it's interesting. I mean, I'm not.
I mean, there's so many different angles here. Okay, first off, big company, go replace Salesforce. Good luck. You got a Salesforce product suite integrated. Go replace them. Go. Good luck. And if you're going to replace them, you're going to go with somebody that's a direct Salesforce competitor, which is some other software company. You can't just be like, you can't be in like the Salesforce software suite and be a company that has, 5,000 employees and be like, oh, we're just going to go to AI. Like, what? Like, no. Go switch off Adobe. You're a big company. Go switch off Adobe right now. Go. Dare you. You can't do it. You literally can't do it. And if you were to try to do it, which is nonsense, that's ridiculous, you're going to end up in some product category or product that's a straight competitor to them. Like when you work for a mid-sized company, a large-sized company, and you get these products integrated, you realize like you're in the ecosystem. It's like near impossible to leave. Like you could technically leave, but it's difficult. No different than if somebody's in the Apple ecosystem. They stay in the Apple ecosystem. Like the best Android phone in the history of mankind can come out tomorrow, and none of us that freaking use Apple devices are going to buy it. Because we're already in the ecosystem, we already used to using it, we know where everything's at, and we're just like content. We're just like, okay, that is what it is. So unless Apple was to super disappoint us, like the product went to total garbage or something like that, like we're just going to keep buying the device again and again. That's the same way these companies work. You got all their employee forces all used to using it, management. Oh my gosh, to switch to something else, like some AI, like what? And then to have it all in one place, it's ridiculous. Like this gentleman sounds like somebody that's never worked for a big company before. Like literally, that's how he sounds. Like what are we talking about here? You ever worked for a big company before, dude? Like crazy. But hey, anyways, apparently he thinks Adobe, Salesforce, ServiceNow, Palantir. You throw Palantir in there, everybody's just gonna get replaced, magically by something that wild.
It's true across the board, but I do want.
This is a thought process that's going on right now, and now you can see clearly why these stocks are so weak, because it's just crazy talk. But remember, they were talking like this was about AMD a year ago, right? Remember the analysts we listened to here on the Reaction Channel about a year ago or so? Maybe it probably was even less than a year ago, 9 months ago. It's like, I'm not even sure we need AMD, right? Now all of a sudden every big company out there is trying to partner with AMD. They were saying, remember last year when they were saying it about Google? Google's been disrupted by OpenAI. We're not even sure Google's going to be relevant anymore, right? Oh, and now Google's what? Up to the second, third biggest market cap in the world, and now everybody wants to own Google stock. It's crazy, man. Crazy. But a lot of these guys' opinions, is the stock going up? Oh, everything's great. Oh, the stock going down? Oh, everything's horrible. They're done. Like, crazy.
If a lot of the enterprise software companies are going to run into this thing where their customers kind of didn't love them, in terms of how they were paying and everything else.
I have some points on that. You see, we did this 2 years ago. We made this call. And the thing that really bugged us was that the software companies raised prices since COVID 40%, higher than the rates of inflation by a lot. They had fake seat growth due to COVID. And that's even before AI. So if I wrote that report, you'd be really upset. And so much of their earnings were stock options. I think, right now, Adobe, Salesforce, all these companies, you think they're super cheap. Well, there's a lot of stock options in their earnings too that they add back.
Yeah.
So, we'll have to see. But that's what I saw too. And the customers are like, want to push back. And there's all these new kids coming out with new startups that aren't going to do it the same way.
Okay. Next one up here. Software stocks will rebound from AI scare. The moral of the story, to recap that last video, okay? What I want everybody to take from that. Well, one, you can take his bear stance. Like, if you adopt that bear stance, fair play, okay? Second thing I want you to take away from that video is that is the sentiment that is all over Wall Street right now regarding these stocks. And that's why they haven't been able to find a bottom yet. Until you get enough people to say, you know what? Actually, maybe these stocks aren't going to become irrelevant. Maybe their customers are going to stay signed up for it. So how does that happen? When does that happen? Keep putting up your numbers. If you're Adobe, if you're Salesforce, keep putting up your numbers. And guess what? They'll come to you. They'll come to you, just as they did Google. Just as they've done with AMD.
Davidson is out with a note today on software valuations. Gil, great to have you with us. I take it that you heard Carter's analysis of the space. It's not a very rosy picture in terms of performance past or performance future. So why do you think this group, what are the fundamentals that will drive this group higher when they've seen such underperformance for the past 5 years?
Yeah, the simple reality that software businesses are still the best type of businesses. They are recurring revenue businesses that scale well at very high incremental margins. None of that has changed. The good news is we used to talk about software companies a multiple of revenue, and who can really tell the difference between 6 times revenue or 8 times revenue? We don't have to do that anymore. We have great software business growing double digits, 20% and higher, that are now trading in the teens on cash flow, on the 20s on cash flow. Those are attractive price points. And we don't have to fight Carter's charts. We're not calling a bottom on all of software. We're just being selective about the stocks that are doing so well, the companies that are doing so well, and their stocks keep going down every day, that we believe that if we continue to buy those, there will be a re-rating once this wave of negativity is over. Because again, there has been no AI impact on any of these companies. AI has not disrupted or dislocated any software company. And if it doesn't do it this year, at some point we're going to scratch our heads and say, isn't AI just a disruptive technology that good companies are going to adapt well to and bad companies are not going to adapt well to? So if we buy the good ones, they're going to do well.
All right, Gil, so Adobe made its all-time high in, I think, the fall of 2021. Think about that for a second and think what the market's done in the meantime. And we're trading the levels that we last saw in the fall of 2022.
Adobe back then, let's be very crystal clear about this, okay? The difference between Adobe back then, you know, when it set those all-time highs in 2021 and where the stock is at now. Let's be very crystal clear about this. Adobe back then was an overvalued stock. As simple as that. It was overvalued. Look at the trailing 12-month P at that particular time. Look at the forward P. Look at the 2-year forward P. People were paying way too rich of a price for that stock back then. It was overvalued. Be very crystal clear about where the stock price is right now. It's significantly undervalued. This stock is not even anywhere remotely close to its historical trailing 12-month P, forward P. It's not even the same ballpark. So we win from a dynamic with Adobe is back in 2021, extremely overvalued stock, didn't deserve to be trading there. Now Adobe, very undervalued in my opinion, extremely undervalued. Doesn't mean it can't get more undervalued. Adobe could go 200. You know, is it 298? It could go 200. Who's to say like where the bottom is, right? Like, you never know. It could bottom today, could bottom tomorrow, could bottom next month, 3 months from now. Bottom could be 275, 250, 290, 200, 180, who knows? But the moral of the story is it should not be trading at these sorts of Ps. Not with this sort of revenue growth they have in the earnings per share growth and the stability of the business model. Crazy, man. It's crazy talk. So, you know, yeah, you had an overvalued stock, now you have a very undervalued stock.
What's the bull case here, other than the fact that technically we're hitting what should be support, and you can make a decent case on valuation?
So the bull case on Adobe is for all of the negativity around AI, Adobe's growth has actually held up better than the overall software universe. Their growth has decelerated from maybe 12% to 11% or 10% over the last 3 years, which is to say that really strong recurring revenue business that's embedded in every marketing organization and every agency has held up really well. And to your point, the stock has not. It's now trading at low teens multiples on earnings and cash flow. If they just keep doing what they're doing, which is grow 10% this year, then it's not going to be sustainable that their stock will continue to be this inexpensive. That which isn't to call for a catalyst here. They're just going to keep doing what they're doing. It's the narrative that's been very negative about Adobe, again, without evidence. They haven't lost any business to AI, nor does it look like they're going to lose business to AI this year.
What's your take on the Oracle, the bondholders lawsuit with Oracle? They allege that, there might have been malfeasance. Maybe there should have been more disclosure at the very least, because they bought these bonds in September, and then several weeks later, Oracle went out to raise another $38 billion, and they feel cheated. Is this going to be an overhang as companies go again and again to the debt market to finance?
Yeah, Oracle overextended itself for OpenAI. OpenAI promised them the moon, and then Oracle realized that OpenAI actually had promised everybody else the moon as well. And then they overborrowed to build infrastructure. They're now at the very bottom. They're approaching the bottom rungs of investment grade. They're approaching the ceiling of debt ratio, and yet they need to borrow more in order to deliver on these commitments. So they put themselves in a real bind. The stock's gone down a lot. Their debt is trading at a discount. And it's not too surprising that recent debt holders feel like this isn't what they bargained for when they bought the bonds a few months ago.
Okay, listen. Regarding Oracle, they showed Oracle there and Salesforce in the same graphic, right? Listen, those two companies should not be compared at all. Very different plays. Oracle is more of, honestly, nowadays, it's kind of morphing into more of a hardware play versus Salesforce software. But listen, look at the balance sheets of those companies. They're not to be compared. Salesforce has a strong balance sheet. Oracle's balance sheet, nasty. And it's going to get a lot worse likely over the next few years as they have to take on likely massive debt loads to do what they're trying to do here. And then additionally, like, Oracle's just looking like it's a bad business model in terms of what they're getting into over the next several years. It looks like a very low margin business, whereas Salesforce is a high margin business, right? So I don't think those stocks should be compared. I really don't. Oracle could be an opportunity, but the bottom line is, like, I think Salesforce is much more of a sure thing, if there's such thing as a sure thing in the market, a much more sure thing than Oracle is over the next few years, okay? Alrighty, let's get into this next one. And then we'll talk AMD.
Yeah, I mean, I only had a very small position after the company reported last quarter. I thought the quarter was very good, but the stock has not acted very well. I'm down. I was down about 2%, and I just see, like what Josh just said, like, he's looking at some other sectors. Well, I have been adding to some, like, energy positions. I added to Chevron 3 times. I added to SLB last week. I'm looking at Dow Chemical now. I'm looking at the commodity cycle as well.
This is an issue with Wall Streeters, in my opinion. Okay, they're too focused on the short term. She's talking about she's selling Microsoft. It's not acting well. The stock price, right? Moving into Chevron, moving into energy stocks, right? All this trying to get in, trying to get out, trying to make a penny here, and then you lose another penny here. It's silly, in my opinion. You own great companies, you hold them. You get better pricing on them, you buy them, and you hold them. They get overvalued, or you find a much better opportunity in the market for the next several years, then you can sell, take your profit, and move out. You made a mistake, you screwed up real bad, okay. Sell it for a loss. Like, it's like the fundamentals of the company. So let's say I'm buying a lot of Adobe and Salesforce right now, okay? Let's say over the next 2 years, Adobe starts going negative revenue, Salesforce starts going negative revenue, right? Literally, their revenue's in the red. It's going down. I'll have to move out of those stocks and take a loss, right? I don't think that's a very high probability, but it's a possibility. It can always be wrong, right? You're never going to bat 100% in this game. Sometimes you will sell stocks for a loss. That's part of the game. That's part of the process. There's no sweat in that. That's what do I call that? What do I call that when you got to lose money on a stock and you got to sell for a loss? The cost of doing business. You want an opportunity to buy the next Palantir, the next NVIDIA, the next Tesla, the next whatever, right? AMD, go through the list of them. Sometimes you're going to have to sell for a loss. Sometimes you'll make a mistake. But you've got to stay focused on the long term. What's the long-term trajectory of these companies, right? You can't get caught up in all this other stuff, man. It's crazy. So if what I said makes sense there and you want to take things up to a much higher level, pin comment down there if you want to apply, join a private group. We have a group of 3,000 investors along with me that we focus on the long term. We're not focused on like getting out of this stock so we can get into this stock because that's where the money is rotating right now, and trying to play these little. There's such small money. It's so like we're focused on the big money, man. Like it's crazy. It's crazy. All these people doing all this wild stuff, and I'm like, dude, you could just play this game so much simpler. Let's research companies. Let's run projections. Let's make sure we're paying fair prices for companies. Let's buy when people are scared, right? Let's sell when stocks are overvalued, and we play that game. It's so in my opinion, as somebody that's been in this game 17 plus years now, so much easier. Is it not? So much easier. And guess what? It's so much more money to be made that way. Because you find a great stock and it goes on a 2,000% run, and you sell after it went up its first 20%, you missed all the money. Who cares about the first 20%? It's nothing. We cared about the 2,000%, right? You got a stock that is about to go up 300% over a 3-year span, and you sell the first time it goes up 13%? What? Oh, we got to rotate the money because now I think the money's going to go here. Okay, you played yourself. What are we doing, man? So anyways, if you want to join a group of long-term focused investors, we got 3,000 plus members in my private group. That will be the pinned comment down there. Like-minded people, the type of people you want to be around, 6, 7, 8-figure investors. Like, not all this just silliness, man. People are just silly in the market. But that's what makes it a great market. For people like myself, we find these arbitrage opportunities, and we're right a lot more than we're wrong, and we just get such attractive pricing. And then people come around and they're like, oh, shoot, that was a big opportunity. And it's like, yeah, you missed it, but it was there for you.
Because I do think it has legs for sure. And I think that maybe, just maybe, the Mag 7 take a pause. We're seeing it. They've actually have already taken a pause. But I come to, Frank, the valuation on this one, it's just not compelling to me. I would rather, as I mentioned, I'd rather own Broadcom, which has industry high margins, industry high free cash flow. The AI, it certainly has exposure to AI, but it also has exposure to some software with VMware. It's diversified. I love the management team. They're buying back a boatload of stock. I would rather pick that name that's down almost every single day since they reported earnings back in December, or I'll go elsewhere. The only 2 Mag 7s that I own now are Meta and Amazon, and I'm frustrated with both of them, to be honest. But I think Meta at a one times peg is too cheap for the growth that you're actually getting and the monetization that you are seeing. It's in terms of time spent that has been up about 5 to 7% over the last couple of quarters. So that's one I would also take a look at. And then Amazon, I think you win 3 ways, right? AWS is accelerating, retail is growing like leaps and bounds over anyone else, and advertising up 22%. Those are 3 great businesses. Yeah. And the stock is so frustrating because it's like flat over the last year. So there are other places I'd rather put my money.
Well, you do own Broadcom, maintained as a top pick over at Oppenheimer. Jason, coming over to you. You own Microsoft. What do you make of Steph's points? I mean, she made it a pretty compelling case to sell out of Microsoft.
Yeah. Listen, the price action hasn't been great. That's for sure, especially over the last 6 months. And I think one thing we could all say about 2025, which I think was pretty straightforward, is these names don't trade as a monolith. There's no doubt about that. Microsoft is expensive. I think some of the OpenAI news is kind of a little bit of a drag on the stock. I mean, but again, 18% revenue growth on a company this size, 25% EPS growth, Azure continuing to accelerate. I think there are some things to like. The PC market maybe continues to lift into this year. So we're going to stay patient with this one, but I definitely understand all the issues you might have with it.
Well, the patience that you may be having may be related to earnings season. By the way, Dan Ives out with a note saying that earnings season should be AI validation for the bulls. Goes on to say he believes tech stocks are going to have very strong Q4, especially Microsoft, Alphabet, and Amazon. The cloud stalwarts is what he calls them, and that's based on his field checks. Josh, I want to come over to you. Are you expecting a very strong earnings season? And by the way, it kicks off in just under 2 weeks when Meta and Microsoft report on January the 28th. Are you expecting a strong earnings season specifically tied to tech?
Yes, because the chips are telegraphing it. So the most, that's like, to me, the most important tell is people are buying these chip names with abandon. The Micron rally, it just tells you that, like, there's not even commentary in the industry about anything having slowed down from last quarter to this quarter. So yeah, I do. I don't know that helps you. We had great earnings We had great earnings the last time they reported. In the winter, they reported the fall quarter, and a lot of these stocks are not higher. Stephanie points out Amazon and Meta, and it's not a given that you'll get great mega cap tech earnings, and that will somehow mean 12, 13, 14% rallies in these stocks. It didn't work last time. So
but
I don't know how much that helps you, pointing out tech is supposed to have 29% earnings growth this year. Do you know that? The net.
Oh, so listen, Meta, Amazon, incredible opportunities in the market, 100%. Like for big tech or Mag 7s, like yes, two of the best opportunities, if not the two best opportunities in my opinion. If you're thinking about for the next, let's call it 3 to 5 years. If you're thinking about the next 3 to 5 weeks, months, who knows, man? We're just flipping coins and throwing darts at a dartboard. But in the next 3 to 5 years, I believe Amazon and Meta are two of the best opportunities for the Mag 7 $1 trillion boys club, right? Additionally, he was speaking there for a moment about something I thought was really interesting. What was it here? MU. I got a Micron story for you. So I have a friend, close friend, who lives in Vegas. He's been a Micron shareholder for years, and the stock has never really made him that much money. But he stayed loyal to this stock year after year after year. It's his biggest holding by a mile, his biggest investment by a mile, and let's just say the man's fortunes have changed. He's doing extremely well for himself in all those years of buying Micron stock. It's all come to fruition, and now he's doing better than he's ever done financially. Let's just put it that way. So, it's definitely a stock because there's a personal connection there that I root for a lot, and I'm like, good for him that he's making a killing now on that stock, right? AMD. So, what's my 2 cents on AMD here? Do I think the stock could continue to rally? And listen, regarding AMD, the stock could absolutely continue to rally strong all the way to summer. Doesn't mean it's gonna for sure do that. But let me lay out the case why AMD could rally very strong all the way to summer. We know 450 goes into production and ramps up, around summertime, right? So what ends up happening is this is the biggest chip thing to happen to AMD. First off, the 355X, that's in production now. That's they're selling a lot of those. That's going to make the numbers great that they're about to report, the guidance strong, all those sorts of things, right? But really, the real reason everybody's really investing in AMD is because of the 450 series chip, right? Which once again goes into production likely over the summer and then ramps throughout the fall time, right? So usually what happens with the stock is there's a ton of hype and momentum before you get to that thing that actually happens. So that's where I can make a case where AMD could be extremely strong all the way to summer, essentially. What could happen, let's say hypothetically this plays out. AMD's insane, just an absolute beast the next, we can call it 4 to 6 months, right? It's just running like insane. And next thing you know, AMD's 300. 350, 375, and we're like, oh my gosh, this stock's insane, 400, right? What could happen after the production starts at 450, you could actually have a sell down, a nice size drawdown on AMD. Because now you're actually at the time period. It happens all the time in the stock market. And for any OG investors watching this, you know exactly what I'm talking about, right? Buy the rumor, sell the news, they call it, right? Where you just have a lot of excitement and hype going into something that something happens, and then, the stock actually falters after that particular point. Usually Wall Street would call them the dumb money, gets in at the very end, or right before a thing happens, or right when it happens, thinking that's where they're going to make the money, when really you needed to be in that position already, 6 months, 9 months, if not 12 months prior to that thing happening, right? And then that money realizes, oh crap, the stock's not going up, it's actually going down. Now they actually got to this big moment, they start selling, margin calls happen, you get some, option activity that works against the stock. It's a whole situation, right? So anyways, that's my 2 cents on AMD. All right, guys, appreciate you joining me as always. Thank you, everybody that smashes the like button. Thank you, everybody subscribe to the channel. Additionally, if you want to apply to join my private stock group, that will be the pinned comment down there. Access to all my course curriculums, 3,000 plus members in there. It's an incredible group of individuals, 6, 7, 8-figure investors. We'll send you your Steel membership cards in the mail once you join us in there, and also get full access to 1000xstocks.com, which we're making a lot of tweaks in the back end right now. Okay, much love and have a great day.